Short squeeze alert! Short squeeze alert! Short squeeze alert! Sound the alarm! Short squeeze alert! Yellen's algos going insane. CME shut down because Miss Yellen was unable to trigger her algos to create more short squeezes, so the S&P 500 could crack the 2000 level and beyond. Okay, folks, I think just joking there with regards to price action this morning. Okay, so my video over the weekend with regards to DAX, FTSE and S&P 500, the analysis has now been invalidated. Okay, unfortunately, the reason being, first and foremost, is due to the rip higher in the futures markets overnight, which really is absolutely baffling, given the fact that you've had the escalation from Libya to Syria with regards to the firing rockets into Israel. Obviously, that's a situation. Although, having said that, given the fact that the tone of the language that's coming out of Russia and Ukraine basically seems to be conciliatory with regards to Miss Merkel, obviously, as well, and there seems to be some sort of reconciliation. So again, de-escalation remains a theme in Europe. So obviously that's one catalyst for a short squeeze in Europe. Obviously US markets short squeezing, as we know. S&P almost near 2000, the Nasdaq obviously making a new high again, and the Dow obviously breaking through the 17,000 barrier and continuing. So even though Miss Yellen was hawkish, but they are interpreting it as dovish, because the BOE came out over the weekend and stated, well, one of the members from the BOE or one of the board members, etc., put emphasis on wage growth. So it seems to be wage growth seems to be the new mantra now. That's the excuse that they'll be using, because they know wage growth is not going to be rising. Therefore, that leaves them in the dovish camp. But that doesn't really make sense, given the fact that US economic data has come out much stronger than expected, and everything is certainly pointing in the right direction with regards to higher interest rates there. The UK, it was, but obviously the situation has slightly changed with regards to inflation numbers last time, although that might be an anomaly, and yet we have to see more data, and obviously we'll come to a conclusion then. But for now, the way in which I would like to interpret it is that, number one, the short squeeze has been caused by Miss Yellen's algos. As we all know, they don't give a flying daggers about geopolitics, socioeconomics. Okay, that's one reason. Obviously, that's the first and foremost reason. Okay, number two, the de-escalation Russia-Ukraine. That seems to be the tone at the moment. And number three, Mr. Draghi's speech from Jackson Hole is now being interpreted, given the fact that the euro is down quite heavily. With regards to Mr. Draghi doing QE, even Mr. Kuroda is now stating that he'll be doing QE. So they seem to be focusing on that and emphasizing, placing a lot of emphasis there. Okay, so they're the three reasons so far, or thus far, for obviously adding the fact that we've got a bank holiday in the UK. Whether that makes obviously has much of an impact, it's a different story altogether. And another factor as well that's obviously pending right now is Mr. Francois Hollande asked Manuel Valls, the resigning PM, to form new government after economy minister questions policy, etc. So that could also be another catalyst for Europe to move higher, because obviously Mr. Hollande and the government change there may well be for the better. Okay, so there's certain factors, but still, from my perspective, it's still very puzzling. Given the fact that the USD JPY, Euro JPY has certainly come off as expected, which I explained in my video, and the stock markets generally tend to follow the yen pairs for direction. So given the fact that the yen pairs are certainly coming off, yet the market is moving in the opposite direction. Okay, so again, that's very confusing for me. So I have changed my bias, because I've been forced to change my bias. So I have gone, but shifted my bias to bullish now as opposed to bearish, because this market obviously wants to continuously move higher. If you look at the move with regards to the FTSE, I mean, let's just focus just purely on the S&P 500 first of all. So when you have the S&P 500 futures breaking through and breaking the previous high and pushing higher, then you have to respect that. Also, when you have the Nasdaq breaking higher and breaking the previous high, then you have to respect that. Even though we had a triple top resistance on Friday, 4060, I expected that to be the top. Obviously that wasn't the case. Markets are moving in the opposite direction, and certainly are not playing ball with regards to the bearish perspective. So I have to respect that from my from a trader's point of view. Even though we did have a doji on Friday, yet the markets continue to short squeeze higher, along with European equities as well. If you look at the German DAX, that certainly has to play catch up now to the S&P and the Nasdaq. So the next level here, from my perspective, seems to be the 200 MA at 9510. If not 9510, obviously, given the fact that we have this de-escalation, this is previous support equals resistance there. And we do need to hit the upper chart at 9510. This downward sloping trend line looks as if it will be broken, and obviously the markets will continue to move higher and thrust higher. So interesting times, folks, interesting times. We failed to hold this gap as resistance. Obviously it did hold initially, but we seem to be in this bullish channel. So therefore, like I stated, 200 MA is next, 9510, if not 9600. Certainly not out of the equation. Obviously it can move even higher if Mr. Draghi does QE, and obviously if there's a de-escalation in the Russia-Ukraine situation. So bear all that in mind, folks. Okay, all those factors certainly need to come into consideration. So we just have to respect the status quo, and the status quo at present seems to be the inverted head and shoulders, as you can see for the Euro stock, certainly is in play. Previous support equals resistance is certainly holding for now. We've broken out this downward sloping trend line, therefore bias is bullish there. 10-minute chart, obviously bullish. Well, you had a bull flag, certainly seems to be fading for now, but should continue. Let's go to our daily chart. The daily chart, as you know, it looks like a topping tail thus far, but this HNS formation will be broken. Why? Number one, de-escalation in Russia, and obviously QE from Mr. Draghi, and they are two catalysts for this HNS formation to fail. Whenever you have a failed pattern, you create an emotive move in the opposite direction. Okay, so bear that in mind. With regards to the FTSE 100, well, we've had this downward sloping channel. Obviously this channel is now subject to be broken, given the fact that the FTSE is now currently at the 800 level. So what is the next resistance level? Is around 6835, 6840. So these are all the reasons what's forcing me to change my bias, and I have to respect the bullish side of the equation. It has been an absolute stellar move. As a trader, it's very hard for one not to be bearish, given the fact that we've got lower lows, lower highs. TA states bearish. 61, 75% resistance generally holds. We had a topping tail here. We had the situation Russia, Ukraine, Hamas, Israel, ISIS, etc., etc. We've got the ash cloud over the weekend. Even that's having no impact whatsoever. And yet this market continues its rampant move higher, defying all horizontal and diagonal resistance levels. That is one hell of a move. Okay, so you just have to respect that. That's the tape. That's price action. We have to react accordingly. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye now.